Talk about some tips about personal finance and how to use money hacks to basically cheat your way into early retirement faster than you otherwise deserve to have it. So how do you retire in your 20s and your 30s? I think, and obviously we'll leave the Q&A open like we always do, where you guys can jump in and throw in questions about real estate, stocks, the current state of the market, whatever it is you guys want to talk about. A few, I think, undervalued tips I'm just going to throw out there right off the hop is a lot of folks underestimate the power of a side hustle. And I think that's something that, is sort of like a hack that you can pick up where you can do something that you love. Most of the time, your side hustle is something that you enjoy. So it's aligned with your passion in some way. Like maybe you play piano and you want to do piano lessons on the side, and you could do 3, 4, 5 students at once and charge $30 a student and make $100 an hour, right? That could be a cool side hustle, and it's fulfilling something that's desirable. In my case, initially it was coaching people. It was teaching people and helping them manage their money better. It was helping them find deals. All of that was a side hustle, and then I was also a doer. So for me, the side hustles were real estate, and I'll be honest, like, I enjoy deprivation. And so just, you guys know me. I've been going live every week on Wednesday for 5 years. I've been making videos for forever. When it comes to deprivation, it's almost like a natural stimulant for me. I don't even drink coffee because I get a thrill out of pushing myself to the limit to see how far I can go. It gives me a boost of energy, right? And so with the rental business, I just love seeing how far I can push a deal and see how far I can get it under asking, see what kind of terms I can throw in, see how hard I can push on the expenses to get them down. I have no problem being assertive and going after, well, no, I'll be honest, I hate this part, but fighting with contractors to get prices down, to negotiate on prices, bring in 3, 4 contractors to use, the quotes and get them down as low as I can. I want to talk about insurance today too. It's something that, I like to self-insure. And so that's been something that I've sort of subscribed to, is the self-insurance piece. But as your income grows over time and you become wealthy, you guys know I talk on the channel all the time. What's the slogan that my grocer uses? Spend less, earn more, maximize returns, and the difference. In that order. But it becomes the flip as you build wealth, right? Like, the spending less doesn't matter as much when you're making, if you're making well into the 6 figures, maybe even 7 figures, it's kind of hard to, unless you get really lavish, it's hard to spend a ton if you come from frugal roots. So if you come from the base foundation of being about dollar efficiency, and then you realize that your time becomes really valuable, and now it's about time efficiency, every hour you spend saving might net you $50 an hour. But if you could spend that same amount of time and optimize your net worth so it grew by an extra 1% this year, if your net worth is $1 million or $2 million minimum, that's $10,000 or $20,000 difference by getting a 1% higher return on your portfolio. So a lot of those things are really important. I think it's under discussed, I think. And I'll talk about insurance. As your net worth gets higher, the tax savings can be high enough to overweight the cost of the insurance. And it's a pretty cool vehicle when you can lever it up, because you can lever whole life insurance policies. If you focus on the high cash value year one, you can lever them 10 to 1. So you could put in $1 million and get out 900 immediately. And then within 5-10 years, you pull out more than all of the cash that you put into it. And all of it's growing tax-free inside of it, like a tax-free savings account. So I'll touch on that a little bit. It's something people have been wanting me to make a video on, so I will. Okay, Stickman Finance says, Mike, when do you think real estate market will go back up? I'm looking to buy in the spring if there is inventory. Well, Stickman, there is inventory, a lot of it. It's piling up. The reason for that is that things just aren't selling, right? Average days on market is just spiking in most local markets. So when we talk about strategies to hack your money, the first place to look, I think, in this market, and interestingly, we saw rents skyrocket, but rents have actually started coming down again. And a lot of units are coming online and people just can't afford it. So if you can get in there and you can rent hack, that's another great personal finance tip. Start with rent hacking, which is you rent a house that's bigger than you need. So you purposely rent a bigger place. You're like, what? And then you rent out portions of that house through sublet. You don't need a sublet agreement. You don't even need permission from your landlord because you live in the property. You're just bringing roommates in. And you segregate portions of the house. Maybe it's the basement you rent out to someone whatever, so forth. You could rent a brand new build house right now in London for like $2,800 a month, a really nice $1 million house. Your mortgage payment to buy that house would be like 6,000 a month with carrying costs, insurance, everything. You're actually like paying like 40% less to rent it than to own it. So the landlord, if they're buy at current market value today at a current mortgage rate, 80% loan to value, they'd be losing money to rent it at market rents. So arbitrage that opportunity, take advantage of it, rent hack, and live there for free. Go take the basement. If it's an unfinished basement, you lay some rugs down, you make it nice. That's your bedroom. Now you have a full basement all yourself, and you have 4 bedrooms on the second floor in most of these new build houses, and then the main floor is sort of a common area. There you go. You're all set up to rent out those 4 bedrooms at $900 a month. You could ease those $3,600 a month. Your entire rent's covered. You could live in a $1 million house for free, rent hacking. Then you upgrade eventually to a duplex or a triplex living by house hacking. You buy a house and you hack your way into living for free that way as well. You have a guest house in the back, a lane house, a basement apartment, all that kind of stuff, so that you can still live a good life, have a good quality of life in a property that you own, where you're living for free. And that's something that I've subscribed to for a decade now. Those types of strategies are a cornerstone, especially in the beginning of your journey, like before you have your first million or two. It's essential to building that foundation. Everyone that I know who is multimillionaire, 8-figure, all of them started embracing frugality in a certain way. And usually you gravitate away from, dollar frugality and, dollar efficiency, because frugality is really about the efficiency of the dollar. You gravitate more to, how do I grow the wealth that I have now, because that has a bigger impact than what I'm spending. And then, strategies about maximizing your time. And so sometimes it might seem crazy to and it's weird because now things seem crazy to me, like waiting in line. I used to price match groceries, and waiting in line I used to get $250 in groceries for $125. That's 50% off groceries. I get up 50% off everything, lettuce, whatever I'm buying. I could find a way to price match it and then use points and use coupons. And I was able to get stuff down big time. And I was like, oh, it's an hour of my time. Save $125. That's a great hour of my time. Now I'm like, my time is so much more valuable than $100 an hour. And I also don't enjoy it anymore. It's not worth it. I'd rather just get Instacart. I pay for a membership for the year. They ship stuff to my house. The delivery guy drops it off, pulls up my long driveway, comes inside of my house and drops it off inside my house. I think it costs us nothing because the price is the same. Membership's $100 a year. So I lose the ability though to do all that couponing crap that I used to do before. So it's like, oh, I'm paying regular price now for groceries. These still have sales on and stuff, so you can get a little bit of deals, but not near the discounts that I was able to get by going in store. But I save an hour and a half of my time packing up the kids, going to the store. Like, that's an example of a hack, right? Now I'm hacking my time. I could go do, a deal and make $10,000 in that same amount of time. That pays for groceries for the next 10 years. One deal. So all I have to do is just knock a grocery shopping 1 month, spend that time locking up one deal, and I paid for groceries for 10 years. So that's, yeah. I mean, for me, that's huge. But circling back to your question about the housing hack, I think that maybe I have a personal bias because, again, I've developed a competitive edge in real estate, but it's one of the best hacks because you can go buy a property if you can develop those skills at a significant discount. And on day one you buy, you could unlock 10, 20% of the value of the house in equity, or you just buy it that much of a discount. You don't have to do much to unlock that equity. Sometimes it requires, getting the property vacant. Sometimes it requires, some painting and some floors. You gotta put some money in, but then you're able to make a 3x return on that investment of flooring and paint by repositioning the property or landscaping, things like that, right? But yeah, I mean, getting into real estate, I think is a huge way to make a great amount of value in a short amount of time. You can't arbitrage that in the stock market. So real estate gives you an opportunity. You can do it in the business world too, by the way. You can buy businesses, turn them around, sell them again, or just buy businesses, reposition them, and keep them, and put in someone to run the business. But the problem with that is that the businesses that are super solid are not that readily available. They're harder to find in certain markets, and so I think real estate's an easier entry market. It's harder to lose money in a business. You invest in the wrong business, the right key staff leave, you can lose everything. In real estate, you mess up, the contractor screws up, he screws you, he leaves, the tenants in there, they screw you, they leave. You still have an asset that, if you were smart when you bought it, is worth more than what you bought it for. Maybe worst case scenario, everything goes wrong and you're breaking even if you bought smart. So that's where I think there's a lot of value in real estate, in the stability of it, in the consistency and the predictability of it. You can build a business around an asset that's super solid. However, some people got caught up in the hype earlier this year in certain markets. Not every market got hyped up like this, but Ontario did get hyped up. And in Ontario, what we found, as you guys know, is that prices ballooned by like 30% in a 9-month period. And then they fell 30% in a 9-month period. So the market is down. It isn't down relative to like 3 years ago. It's down relative to a year ago, sure. But we had a huge balloon up. Everyone saw it was overvalued. There was a lot of hype, and that came back down. Directly proportional to interest rates, right? The further interest rates stay up, and the higher that they go, the worse pricing power people have. They can't qualify for as big of a mortgage. The payments that they have, even if they could qualify for it, are much higher. So even if they could qualify for the mortgage, they can't afford to pay it. And then cash flows is significantly reduced. So to answer your question, I think a large part of the equation between the supply and demand curve right now is heavily related to interest rates. And so do I think by the spring we will see 3% interest rates again? No. They are cranking harder on that lever, meaning rates are going higher into December. Today, we got news from the Fed that they're going to ease up a little bit. They're not going to be as hard. They're going to wait and see if all these rates that they've pushed down our throats the last few months are going to cause inflation to come down. Now, this is the thing that I hate, or rather love to point out, is that inflation has been running wild now for a year and a half. It's not transitory. We're continuing to battle it, and it's still high. What happens now if they can get to zero? They say, okay, inflation's back down. When do we go into deflation to correct all this inflation? It was supposed to be transitory, and it lasted for a year and a half. So the cost of goods has been, say, 10% inflation for 2 years. Let's say it takes 2 years to finish this. Let's say next year, best case scenario, next year inflation's done, right? We have inflation back under control. We need deflation to fix what they just screwed up for the last 2 years, because inflation stayed high for way too long. Every month that inflation stayed at 10% annual, we were getting like 1% increases in the cost of goods for that period of time. That's a 10, 20% rise in the cost of living. And do you think the government's going to correct for that? No, because deflation crushes economies. They can't afford to. What they should have done, the more prudent, right thing to do, was in December, large 1.5% rate increases, the highest we'd ever seen, quickly. Rip the Band-Aid off, stop inflation in its tracks. They didn't do that. It's more like a 1980s Volcker style, where the Fed, pivoted back and forth and stimulated, and it went on for like 10 years. We could experience that again. I like the language they were using up until now. Now they're getting more dovish. The markets are rallying. Stock market's rallying. I'm still short, by the way, on the stock market. Just as an aside, I remain short the stock market. So I find money where my mouth is, and I think that we are in for further pain ahead. To circle back, Stickman, to your question about the real estate situation and when we think things are going to come back, I think things are more likely to stabilize. I think U.S. mortgage rates for something like a Canadian investing down in Florida are close to 10% right now. They're high 9s, 10%. So a 10% mortgage on a $500,000 average house means you're $50,000 a year just in interest costs. Then you have property taxes, hurricane insurance, maintenance, capex. Maintenance capex are high. You've got all those miscellaneous other expenses that, like utilities and whatever else, water heaters and everything else you have to deal with. Most of that's covered in capex, but all that stuff adds up, right? And so you're looking at a $67,000 burn a year on a $500,000 house. Even 1% rural property doesn't cash flow. You get a $500,000 property renting for $5,000 a month, and it still doesn't make any sense at these rates. That's where it's difficult for real estate to moon. By moon, I mean like the prices to rise. That pressure makes it really hard. It only really works if you start pouring cash into it, and then your cash is getting you a shit single-digit return, right? Because the cap rates are not that low. So you might as well just do mortgage lending at that point, because it's more passive and it's safer. Because again, remember, if you're mortgage lending, someone else is putting their equity up to be lost first. If there's any market crash or something happens to the property, their 30% equity is gone before your 70% mortgage has even lost $1. Whereas if you own the property and you have equity in the game, every dollar the market drops, your equity is 100% exposed. There's no down payment there to protect you. So mortgage lending is safer. It's a safer place to put your money. And right now, yields on some of these first mortgages are higher than you're going to get buying property. So why would you put your cash into property when you could put your cash into property, someone else's property, and they put 30% up as a down payment, and their equity can get lost and yours can't. And you're getting a safe, consistent yield. The only reason that you'd want to buy property is if you believe that real estate's going to moon all of a sudden, that inflation is going to come right back down, rates are going to come right back down with it, and we're going back to printing, and that, kumbaya fucking eye. Everyone's like, kumbaya, let's go. So speculators, and that's speculating. There's nothing wrong with buying a couple properties right now. I'm a strong believer in dollar cost averaging. And I think real estate over the next 5-10 years has really, in certain markets, especially Ontario, Florida, has really good, immigration trends supporting it, has really good supply demand issues supporting the price to rise over time, and they can't keep up with demand needs and supply side problems. Apologies, guys. Oh, this is a dirty mustache. Now that I look at myself in the thing. Ugh. A couple more days and I'll be able to shave it off, guys. Movember, Men's Health, make a donation. At least think about the fact that, and I just want to, take a pause for a second, just mention the fact that, like, men have a tough time in this world right now. We're told to be tough. We're told to be strong. Suicide rates are like 80% men. The majority of jails are men. Men are suffering right now, and we're told to be strong, and a lot of men are going through difficult things in silence. And so societal pressure is difficult for men. And so that's at least part of why I sport a mustache every single November is some of those challenges that men are going through in men's health and men's awareness. A lot of guys don't take care of their health, right? And are told to be tough for their families, and they push themselves, and they die sooner as a result. Men die faster than women, which don't live as long. It's tough, It's a weird culture we're living in too these days. I don't want to dive into that, but anyway, back to my rants about personal finance, real estate, and whatever you guys want to talk about. So let me go down to the Q&A here. Aiden says, "Hey Mike, hope Rosie is feeling better. Thank you for coming online." Aiden, I appreciate the kind words. Yes, you know what? I will share this. Last last Thursday morning, my daughter has pneumonia, or had pneumonia, and we all got sick, unfortunately. All my kids got sick, and it was brutal. But my youngest daughter is a year and a half old. She stopped being able to breathe, and her oxygen levels dropped, and we took her to emergency last Thursday morning, and she was admitted to the hospital immediately. There's supposed to be a 20-hour wait, so we waited. We were going to bring her on Wednesday. We didn't. Thursday, we finally brought her, and her oxygen levels were like 78%, so she was struggling to breathe. They immediately rushed her in, got her on oxygen, IV. We got great overall treatment. We didn't have to wait very long, despite the fact that in Ontario right now, there are 40-hour wait times in many of the hospital emergency rooms right now. People are dying in the emergency room here in Ontario and in Canada. There's several stories. I've been talking to paramedics and nurses. We have a shitty system here. We need a two-tiered system, or overhaul at least. My daughter was hospitalized Thursday, Friday. We were worried for her life. We were worried for brain damage, given how low oxygen levels were. She was just struggling to breathe so hard. But she came back, and she was in the hospital for 4 days. We got a private room. We had great treatment. She's on great great antibiotics and things, and she made a great recovery. And so thankfully no permanent damage that we can see right now. And we've all been sick for since Thursday. I've been fighting it with tons of herbs and vitamins, and so I've actually avoided pneumonia and the influenza. I got a little bit of a cough, but I never got super sick like they did. My cough sounds way better than how theirs did. So that's been a struggle, because when my wife was there with our daughter for 4 days, she didn't leave the hospital the whole time there, right? And I was at home with the other two girls, trying to pick up the pieces and deal with all the things that I have going on, as well as trying to be the best dad that I can be and keep the house together. So there's a lot of takeout, and it was tough. If you follow my stories, you know that was it was a really tough weekend for me. So Thursday, Friday, Saturday, Sunday, and yeah. So now they're getting better. Things are good. I'm blessed. I did a lot of praying, and everything went well. And I'm thankful that everyone's healthy, and that those times really underscore. Money's important, sure, because money can fix pretty much any problem, and it makes everything easier. There's no doubt about it. But when you don't have your health, you have nothing. When you don't have your family, you have nothing. So that's just another little epiphany that I had coming out of that experience is, you ever really want to feel really good about your life, just get really sick. You come out of that sickness, and when you finally get better, you're like, wow, the birds are chirping, the sky is, just amazingly blue. You're walking around, you're breathing fresh air. You're like, I can walk, like go for a walk and I feel amazing. Life is just, there's so many little things that you overlook. And I think that that's something that we take for granted, being in good health, as an example. That's just something your health is your wealth. And so it's it's like oxygen for a fire, It's, take care of yourselves, guys. You can push yourself and that's okay. But, and don't forget about the future too. I mean, that's why I advocate so hard for saving and for investing and for thinking about tomorrow and your future self. But don't forget to stop and smell the roses while you're doing that, Anyway, next question. Where do you find real estate deals when you first start out? So, sorry guys. Where do you find real estate deals when you first start out? Well, most people go to the MLS. And that's a great place to go, especially in a market like this. You can sift through the MLS, and 1 out of 10 properties on there, maybe 1 out of 20 properties on there you could negotiate that into a good deal. You'd be surprised how many sellers right now will take 80 cents on the dollar, and you see a list price and you think that that's all it will go for because 5 sellers told you that's all they're going to take. But 1 in 20, they say yes to 70 cents on the dollar, 80 cents on the dollar right now under the right terms, quick closing, what you can give them things that they might want that get you a better price if price is your number one factor. But a good deal might consist of a vendor finance deal. I might pay full market value for a property if the owner is willing to do vendor financing and provide a 3% mortgage for the next 5 years, 2.99% mortgage for the next 5 years. I don't have to get any financing. I just got to put 20% down. I take over their property and they're going to finance the whole thing at a rate that's 1/3 the cost of going to the bank. I mean, there's a lot of value in that. Over a 5-year period, that could amount to 20 cents on the dollar in value. And so you might be able to give someone full price, the price that they are asking for, which might be like 90 cents on the dollar, and they're happy with that price. If you say, hey, you got a bunch of equity in this property, you want it in cash, I'm going to give you a mortgage payment every month. I'm going to give you a little bit of principal, a little bit of interest, and every month you're going to have money in your pocket. You're going to be the bank. And they're like, oh, wow, I can be the bank? That sounds sweet. In this interest rate environment, you can pay them 3-4%, 5%, and it's still amazing compared to what the bank's going to offer you. When prime's like 6%, right? Most people are paying prime plus. So a good deal might not appear the same to each person. I think that there's a lot of value in how you structure, I guess, the terms of the deal. And vendor financing, where they put a vendor mortgage on it, can be huge. It could be a zero down deal. If you structure it right, you can walk into a property with none of your own money. You take over the payments, you start paying them directly, right? And they're getting cash flow now. And maybe they weren't running the property very well. And so you paying them $500 a month is more than they're making when they own the property. So now their money's working harder for them than it was when they were owning the property because they weren't utilizing the property effectively. And in your hands, you're able to unlock more value from them, which again is great for you, great for them. Put a little bit of sweat equity in the property, change the rents over maybe. There's lots of ways you can pivot and make a deal great. But I didn't realize that when I first started. I think I just started on MLS, go on Kijiji, Craigslist, Facebook Marketplace, all those places. You go on there, those are some money hacks to find good deals on apartments, stuff to buy and sell. So that's important, I think. You got to really spend the time at the outset. The deal hunt is the most important part. A lot of people, they look at like 5 properties, offer on one, and they're done. And that's their experience buying a house. And so don't take advice from your Uncle Charles, who's bought one house in his whole life, right? Or your Aunt Lydia, or just made up a name, who's, bought 3 houses in her whole life, right? Those people don't know how to find a deal. Most of the value in real estate investing comes on the acquisition, about the right terms, the right price, the right structure, know what you're looking for and how to analyze it. I'm probably going to launch some sort of mentorship program where I teach people how to analyze deals and we partner up on deals. I have a bunch of candidates who want to do that. I would definitely have to charge something for that program, maybe 10 grand, but it might be or 15 grand or something to join the program, but then I'll refund it against the profits of a deal. So it'd be like a deposit more than a course fee. I haven't decided how to structure that. It might just be a fee, and then that gets you entitled to a program where I teach you how to analyze deals properly. We lock up deals together, and I guarantee that we do a deal for every student that I bring into the program. We do a deal together, I guarantee it, and I'll line up financing with that. Like I have flipping financing, and so that's something I'm looking at doing. It would scratch the the desire to teach and help while also making a sustainable business out of it, and it would give me greater reach too. So if I took 10 students into that program and all my 10 students, let's say 7 of those students did 3 deals with me, that's 21 deals that I could be exposed to. And I have excess capital lying around. Potentially I could be, at least in part, a money partner. I can be strategic in the sense that, like, if I have foot soldiers on the ground working, thinking the way that I think of how much we could do together, right? Think of the network effect of that, of having an army of people working on my team with me, right? And so they win, I win, and I want to create win-win situations. And so I did throw that out, and I got a dozen emails to rosehartcoaching@gmail.com, people wanting to join the program. So I'm gonna do something like that. And I think the structure of it, we're gonna sit down with some lenders that I know, and we're gonna walk through how to analyze a deal, how to know if a deal is right, how the financing process works, what it all looks like from A to Z. And then, how do you facilitate through, the managing of it, the renovating it, et cetera, so forth, all the steps. And I think it'll probably look like, weekly calls, like group coaching calls, and then maybe also another call individually once a month or something where we specifically walk through details, and I'll have to build some sort of loose program. I don't know, there's something there though. I see a lot of people doing it right now in the space, and I want to do it well. If I'm going to do it, I want to do it well. And so my program has to be results orientated. I know a lot of these guys will sell courses and they don't give a shit about what happens. They're like, make 20 grand, done, right? Walk the person through the program. Like, I see so many people reach out to me who are like, paid 40 grand, do some program, and they've done no deals. I'm like, you just paid 40 grand for coaching, you've done nothing? Like, you've learned, but you've not acted on it. And so I think action is important, and not a lot of these coaches will put their money where their mouth is. They aren't partnering with their students and doing deals. So that's a way that I could stand out, I think, is like, I'm a doer, I'm an executor. And so I would like a program where they win where I win. And I have experience doing that. You guys know my mentorship program. I brought 4 mentees in. All of them did deals with me and are had 6-figure success. So I would like to see that replicated. I don't know if I want to have people live with me anymore. Like, that was a different experience, a different time. I'm 30 now, so my wife isn't really on board with me bringing on people to live with me and live and breathe the mentorship. But that doesn't mean that I can't still mentor in the same way that I did then with that program, but a more robust version of that. And I'm okay partnering in different markets too. Like, if someone's living in Florida and wants to partner up, and like, I could have a student there where I could teach them virtually. There's no reason we can't walk through. Like, some of the strategies are so simple, like literally calling 50 realtors and getting, you'll get a pocket listing. If you follow the steps of the program, like, go call 50 realtors, say these 5 things. One of them's going to call you back for a deal, guaranteed. Call the wholesalers in town, et cetera, so forth. That kind of stuff just drums up deals. It's like some people just need that accountability partner, and I can see that. I've had that in different ways with people in my life, not in an official capacity, but I can see the value in that, and I can see how I'd be able to do so much more with that. I'm just going to throw this out there, but like, I also am looking for a good coach. If anyone knows anyone who's the next level, like, I'm already an 8-figure entrepreneur, so I want someone who's executing at the next level, like closing in on 9 figures. I would look for a mentor in that space to help me grow. So if anyone knows anyone, shoot me a message. I would have no problem dropping a ton of money into some coaching to make myself a better entrepreneur, investing in myself to grow. So it's something I'm interested in. I wouldn't mind dropping 6 figures even over the next couple of years into developing my skill set. You invest in yourself, and there's my level that has crazy returns. I could make an extra $1 million just by having the right set of frameworks in front of me, the right accountability, the right circles. Anyhow, appreciate the tips, guys. Let's go to the Q&A for a sec. Stickman says, I'm not seeing a lot of inventory in Oakville. See, the challenge in Oakville, Stickman, is that it's a lot of foreign cash buyers, and they're not as affected by mortgage rates because they're so rich. It's interesting too, in the luxury market, in some cities, I'm seeing like the $2, $3, $4 million houses, they're just not affected in the same way because all of these people are cash buyers. They can afford to just, like, they see a 10% drop in the price and they soak it up. They're like, oh wow, a discount. I was gonna buy the house in cash anyway. You know what I mean? Like, a lot of these buyers are not relying on mortgages to buy it, whereas someone at a $300,000 price point, they need a $200,000 mortgage to buy the house. And so they're very reliant. When they can't qualify for 200 anymore, they can't pay as much for the house. And so that certain markets are less affected. Oakville is very posh. Of the GTA, it's up there as the most posh, right? So that could be why. Certain markets are less sensitive to interest rate hikes, and so if people have cash and they have a lot of equity in their property, they don't have to sell. So they're like, oh, the market's down, I'm not going to sell. Whereas in a different market, they may have to sell, and so you'll see that listing come up where you wouldn't see it maybe in Oakville. But I'm just generalizing. Not every area is affected in the same way. Like Oshawa is down like 30%, right? And there's tons of listings. So it depends on which areas of the GTA you kind of look and which directions you look, right? But yeah, there's opportunity everywhere. Just because the MLS doesn't have opportunity doesn't mean there isn't still opportunity. There is less money out there right now. Finance is struggling. Layoffs are starting. There is not cash like there was before. They're not printing. They've stopped printing this year, by the way, guys. Have you not noticed that there's been almost no stimulus? And so money supply hasn't been growing like crazy. So that's why inflation's stopping, because they're not printing, and they're raising rates. So capital is scarce, and so that makes a good opportunity if you have capital or you have skills to put together deals and capital. If you get a good enough deal, the capital will still come. Even in this market, there's money. Yeah. Next question. Somebody said if you ran for prime minister, I just wouldn't. Thanks, Paul Jones. I appreciate the feedback. He says if you ran for prime minister, I'd vote for you. I don't think I've got a lot of votes. I'm I like to consider myself almost centrist in like most of my ideology, but I might even lean left on some of my social views. But when it comes to fiscal monetary policy, when it comes to taxation, I lean pretty hard right, and so I like to just leave me alone. Let me just do my thing. Let people do their thing. I kind of float off the spectrum entirely, and that I'm not against the whole trans thing that's going on right now. I'm not against that. If you want to be trans, do your thing. I'll try to use your pronouns too. I'm not trying to offend anyone, but at the same time, don't shove it down the throat. Live and let live. I'm very much I'd be fine in a country property, with 100 acres, Yellowstone style. I could see myself in that world. I don't know, guys. People are suffering though at the same time, and I have empathy and compassion for those people, and I feel a lot of the pain that people are going through right now, and so it's tough, right? I thrive in the current set of rules. I find a way to work within the system to win at this game. And there are some people who just want to flip the board over. They're like, I don't want to play Monopoly. And they flip it over. I don't like these rules. Let's go anarchy. Let's go communist. Right? Spread it all out. And I think that's the loser mentality, and it's hard to break the system. And I agree there's flaws in the system, but learn the rules, play the game, and win the game. You can use the system to break free of it. But then that's a lot of work. And a lot of people today in the Gen Z generation, and I'm a millennial, and the millennial generation too, is people they want it, they're entitled to it, and they want it now. And they don't want it's so much better now that the furnace kicked off. I have a vent right above us too, so it's nice and loud, right beside the furnace room, right behind this room in my office. It's nice and quiet now. I lost my train of thought. I'll go back to the Q&A. Mr. Rosehart, what do you think about Intel stock? What price do you find it attractive? Intel's got a lot of challenges ahead for it. It could see further price drops. So full disclosure, I have a huge position in Intel. I have tens of thousands of shares in Intel. So I like the company. It's trading on a low PE ratio, but it has some challenges ahead. I think as a 5 or 10 year play, I think it'll do very, very well. Chips and tech are the future. And all of the new, our fridges are eventually going to be smart and going to talk to each other. Intel has such a potential to do so well, and it's trading at such a low multiple that I would like to see management do a better job in some areas, but I think Intel is a great company. You could put it as a 2% of your 3% of your portfolio. That's kind of how I think it's 1% of my overall, but I have maybe it's higher than that. Maybe it's 3% of overall. It's a heavier position in my portfolio. It's up there with Meta for me, so I like it. Bum, 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 bum. Bum, 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 bum. Hey, look, we got a new person. Flat Pat. Hello, Flat Pat. George says 42 people watching, 44 people watching, 45 people watching right now, and only 11 likes. Come on, guys and girls, smash the like button. So smashing the like button when you're watching a video on YouTube is kind of like when you go to see someone play at a concert, or you watch someone speak in a room, and when they finish speaking, everyone claps. The way you clap on YouTube is you click the fucking like button. Excuse my French. You click the like button, and that's like, your way of appreciating that you got some value. If you stayed here for more than a minute, click the like button. So Flat Pat, if you're still here, you obviously haven't watched any of my videos, but I've been going live for 5 years now. You can go check me out on Instagram, Mike Rosehart. I pretty much daily post stories of my stock portfolio, so you could see it there. A lot of the trades that I'm doing on the Interactive Broker app, it shows the balance on that account. I've done tons and tons and tons of, like I post 10 stories a day, every day, 365. So I do 4,000 Instagram posts a year for the last 5 years. So I've got 20,000 Instagram posts of me walking through properties and trading, and you can see the balances. Like it would be really hard for me to take a video and scroll through all my trades for the day. You can see every trade. Like for me to Photoshop that would take, you couldn't. Like I would have, it'd be a full-time job all the time for me to Photoshop Interactive Brokers every day. People who know me know that I've had a ton of success. How did I do it? So at 20 years old, 17 years old, I went off to Western. By 21, you guys all know the story, but I'll reshare it. Why not? By 21, I was graduated. By 21, I was graduated working full-time in consulting at Infotech. And I worked there for 3 years full-time. I made 60 grand a year. So that's like, what, 180 grand or something. I paid no tax. I had tax credits for my education. I had no student debt because I went on a full ride scholarship. And I had a bunch of other bursaries and scholarships that I applied to. You can go through and see my stories, go to my stock portfolio, whatever you want to do. Look at the haters, eh? Like, people are just haters. That's cool. Like, it's all good. Nothing to prove to anyone. You can check for yourself. I've been doing this for 5 years. So, but most of my success came, so I was 23, 24. I had 17 properties. Each one is cash flowing. Back then, you had great cap rates like you don't have today, right? Like when I was buying properties in 2012, 2013, 2014, to be honest, anyone who has, if you have like 5 properties in like 2014 or 2015 or 2016, even 2017, if you have had prime properties for 5-6 years, even 10 properties, like the appreciation was 100 and something %. If you bought, even if you didn't buy smart, everyone who's had 10 properties who I know for like the last 5 years has like a couple $1 million. So like a couple millions, like if you've been in the real estate game long enough, everyone has a few $1 million. The differentiator is like the really good operators did a lot of deals, and they did it at scale and at size, and they made $10 million, right, over this time. So I would say, the people who I know who are really good operators, they're all having, of all crazy success. But yeah, back then you could get $500 to $1,000 a month cash flow on a property because interest rates were like 3% and properties were well over 1% rural London. So when I quit my job, I had 17 properties, and I'd say 14 of them were cash flowing like $1,000 a month. So that was the 14 grand was from the real estate portfolio. Was that entirely passive? No. Like I still had to coordinate, if there was a leak, I had to coordinate a plumber, right? Flat Pat says, you said you were making 14 grand a month when you were 25. Yeah, so when I quit my job at 24, I was making 60 grand. My wife was making like 40. We both quit our jobs, but I had 17 properties, so I had levered up to the tits, basically, right? Like I had mortgages, 75% loan to value on all the properties. I had 25% equity. Those 17 properties were probably worth like, I don't even know what they were worth at that time. I couldn't even guess, but maybe $4 or $5 million. I don't know. They became worth a lot more in the coming years. But back then, I guess when I was 24, that's 6 years ago. So yeah, like 17 properties would have yielded a little around 14 grand a month. I did have a stock portfolio at that time too. It wasn't huge, a little bit of dividends. I did do some private lending at that time too, where I think I had a private mortgage lent out and I was making like $1,000 a month from that. Just living off of my assets, right? So yeah, that sounds about right. But then I started doing deals. And so in 2017, 2018, I started partnering up with people. That was the first time I started doing joint venture partnerships. We did 50 property deals in 2018, 2019. And that's where things just mooned, right? Like when you do 50 deals, and let's say you make like, even if your cut's like 30 grand on a flip, on 50 deals, $1.5 million. So I started making 7 figures a year after I quit that job. When I freed up the time, and like I just took a bit of time to chill, and I was like, you know what, I want to just try to push myself. And so that was a good experience. And 2018, 2019 were good growth years. Um, yeah. So anyway, thank you, Flat Pat, for your commentary. I see you on Instagram with no shirt flexing. That's got to be years ago. I don't think I've done any shirtless videos in a good minute, but maybe I did 75 hard like a year ago. Yeah, for sure, there are definitely pictures of fitness on there. That's not the primary thing that I post on Instagram. Most of what I post is advice around personal finance, real estate, stock trading, anything to do with money or finances. And then also like I did share too much around the pandemic and I got almost banned. I'm on 3 warnings for sharing misinformation related to the pandemic. So I shared some data. Honestly, the 3 bans I got were, one is an Elon Musk retweet that I shared, which is like, okay, that's a quote. Another one was a George Orwell 1984 quote that kind of compared what they were doing with the trucker convoy and the shutting down people's banks and locking people in jail without rights for 60 days. I shared some of that stuff and thought that was a bit Orwellian, and that got me another ban. So yeah, I'm strongly opinionated when it came to politics. I try to stay back from that now so I don't lose that Instagram account. But yeah, that's, you can go on there, you'll see a whole bunch of stuff. But yeah, hopefully you get some benefit from it. Definitely, I've been doing this for a long time. Been documenting things for a long, long time. Port City, how you doing? Says, hey, Mike, just got appraisal done. Hope the numbers come where I want them to be. Me too. Fingers crossed for you. Appraisal time is like it's like exam time. You know, it always feels like just before an appraisal, you'll push hard to get everything just perfect, so you get that nice high mark come in, and then you can refinance, get that cash buyout. There's a huge reward when you have that nice refinance. I love it. Every time I finish a BRRRR, it's like that's my favorite part. Is like the buy is my favorite part, and then when it's finished, the appraisal and the refi is my next favorite part. So cash money, guys. Port City says, have you ever had issues with city bylaws? Pfft, yeah, tons. There are no real estate investors, by the way, no successful real estate investors that I know that haven't had city bylaw issues. If you've went and bought 20, 30 properties, and you've tried Airbnb and you've tried renting them out, and you, by the way, if you buy distressed properties under market value, you almost always get the baggage that comes with it. So bad tenants, they leave shit all around. If you're not breaking any eggs, you're not making any omelets, is kind of how I got to put it. So you got to skirt the line, obviously, but most of the problem properties that I inherited had existing issues with bylaw, mostly due to bad tenants or buildings that had been sort of not derelict, but at least not loved in some time. And so that's where you get great deals. So of course I take those kind of properties on, and they have the most problems, you know, like that triplex that has an illegal unit that someone added 40 years ago. And it's like, now I got to battle the city because no one ever wanted to do that. But that battle, once it's blessed, is worth 50 grand. And so, yeah, I've gone for a ton of battles, and I've lost lots too. The city's a bitch to deal with, and pretty much every municipality. They don't encourage housing affordability. They don't want more units. They're like, not my backyard. And the bylaws are written mostly by old farts who don't want multiple units, who don't want renters. They are written mostly by homeowners. And the focus has not been about housing affordability or supply. So. Hey, Mike, there's the next one. Bum, bum, bum. Paul says, what do you think of high yield leverage call ETFs like HYLD or HDIF or HDIV? You're getting 10 to 15% yield distribution monthly. Seems good to me. So, Paul, in general, covered calls on your portfolio are really great in sideways markets, slightly down or slightly up markets. The reason for that is a covered call is designed to it's when you sell a call, a covered call is when you sell a call, right? And it's covered because you own the equity behind that call. So a covered call portfolio would be like they buy a bunch of equity and then they sell calls on it in hopes that they can generate premiums, right? They're basically selling insurance on the downside risk, and they have the shares in case the shares do rip down. But it does very, very well in a down market, in a flat market. Again, in a solid rip up market, like what we're going to have in the next 2 years, we're going to bottom at some point. I don't know where the bottom is. I can't call it, but there will be a rally. And when the stock market rallies back, stocks like Meta, they're down 70%, will come back that 70% at some point in the next 5 years. And when that happens, if you sold covered calls in your Meta shares, your shares getting called away, you don't get any of that appreciation gain. So the downside is that if the market rips up, you lose with those types of portfolios. But they can, and you also, yeah. So it just in a sideways market, I guess my answer is covered calls can be great. Covered call portfolios don't tend to outperform the market over the long term because they miss out on the gains from the bull markets. But they do fairly well in a sideways market, and we're pretty choppy and pretty volatile right now. So not a terrible place to put your money right now with the covered calls. So just be careful with leverage. Look at what the fund's doing. But yeah, definitely you can make great yields right now selling covered calls. Nothing wrong with that. I sell covered calls on a lot of my portfolio holdings. It's just a way of like juicing the portfolio. So like my Intel, as an example, that I've been holding this entire year. I'm embarrassed to say that I doubled down Intel as I continued to go down, but I dollar cost averaged in. But I started buying Intel at like the top, like $58 a share, $57 a share, $54 a share, then 40 a share, then 35 a share. And now it's like, I don't even know, $27 a share or something. It touched below that even for a bit there. But I sold covered calls on it. And so the whole way down, I'd have my Intel position going down, obviously, because the equity is worth less as the price of the stock goes down. But my covered call, and depends how deep you sell the covered calls, but the covered call over that same amount of time was just like giving me free insurance premium. So I'd sell another covered call the next month and it would expire. I do monthlies and it would expire and I get to keep all that insurance premium because as it goes down, then I win, right? So yeah. But if it goes way up, then they'll call it away on you. You lose your shares. So it can be a great way to juice up the portfolio. I like covered calls. Just be careful on how you sell them and when you sell them. Bum, bum. Kind Man says, hi Mike, what do you think about options selling for cash flow? I find it hard when I sell options not to gamble on plays that I really like. My challenge, I ran the options wheel I've been running for 2 years now. And running the wheel is basically selling puts till you get assigned the stocks that you want to hold at a discount. So you get to buy shares at a discount, which is like awesome. That's what you want. It's like, hey, you could buy Intel right now. Let's say Intel trading at $25 a share. It's not, but let's just say it was. I could sell a put on Intel to agree to buy Intel at $25 next week, and I'll get 50 cents a share for that, hypothetically, or $1 a share. So now next week I get to buy Intel at $24 a share. No matter what happens, I get $1 a share off Intel. So if it moons, I miss out on a lot of that mooning, unfortunately. I would just get the $1 a share. If it goes down or stays sideways and flat, I get $1 a share for free. So it's an option contract, which gives me or gives someone else the right to put those shares into my account. And unless the shares rip up, which then that sucks running the wheel because then you have to run the wheel again at a higher price. So you want to do, like, if you're going to, ideally what you want to do is sell your puts, get a discount on the shares, get assigned the shares, or you get money for nothing. Those are the two ways, right? Like if you don't get assigned the shares because the price went up on those shares, then you just got like a 1% a month return for nothing. It's insurance. But otherwise you get assigned the shares, and then to get rid of those shares, you would sell covered calls on them. And so you can run the wheel to effectively, even though a share price could be flat for a whole year, you can make a ton of money because you're getting paid insurance to insure that share price the whole way on the buy and then the covered calls to then get your shares called away. Right? So that can be, depending on how you structure them, running the wheel, the options wheel, either backwards or forwards. You can run it the other way too. Like if you have shares already, you get them called away and then sell puts in them, get them back again. You can run it in reverse. You can run it either way you want. But yeah, options selling can be profitable. I ran the wheel on tech companies and on crypto. So had I not been running the wheel, my portfolio would be a lot worse off. I'm not near as bad as I could have been. I'm beating the NASDAQ still year to date, but I'm down. I mean, everyone's down right now, but I'm down running the wheel. So this year has not been a good year for me. And then last year, I got stupid and I sold one of the legs off on a short I was doing on Newegg, and I sold my protection leg off, and it just ripped up to like $70 a share, and I got margin called. And so I lost $1 million in one day. And that was stupid. That was honestly at first just a misclick. And then I didn't correct it because I saw I'd lost $100,000 already. And I was just like, I need to turn this off for a minute. And like, I came back and it was like 300 grand, 400 grand. Like, holy shit, a worst case scenario. The stock just got short squeezed. And then stupid me was like, what if it gets worse? I just closed the position now. I should have just waited because Newegg went back down to $2 a share. I would have made the entire $1 million back. Now I did hold half of that short and saw it through and ended up making, I think, half the money back in a few months. And by December last year, December 31st, I was fully recovered. So I paid back the entire $1.5 million that I'd lost, and I was back to break even. And then I bought a whole bunch of tech companies and crypto and stuff. And so I was heavily NASDAQ exposed. And as you guys know, the NASDAQ has performed negative 30% year to date. So a third of the value of the NASDAQ's been wiped out. Crypto is down 70 something percent. So if you average out the way I was holding, I've outperformed both crypto and NASDAQ, and those are my benchmarks in that portfolio. I also have a portfolio that's a dividend yield portfolio. That portfolio is not much better. It's much more stable. But yes, unfortunately, I had bad timing on that, and that's just life. In 10 years, it'll be just fine. I missed this question here. Shanak says, hey, Mike, what are your thoughts about Belleville, Ontario? A lot of investors are pretty bullish on the region. You rock. Hey, thank you. Appreciate the kind words. I don't know a ton about Belleville. I've heard some things, the grapevine, but I am not an expert at all in the market. Generally, when I'm looking at a market, I want to look at the overall strength of its local economy. So is there one main employer? Are there lots of employers? Is it diverse? What do the statistics look like? So that's the place I start, is like, what does it look like? And then are there good, strong immigration trends? And those sorts of things. And then I would say, hey, that's a good market or it isn't a good market. And then from there, I look at cap rates. So if it's a strong market, it has great immigration trends, that looks like it might grow over time. A lot of immigrants there is a good thing. That's what you want to see. So somewhere like Sarnia, as an example, has horrible immigration trends. Not a great place to be investing for the long term. They're pretty much like the armpit of Ontario. And so that's a place where, and like another place as an example, Chatham. I think Chatham's pretty shitty. I know a lot of investors really love it. The cap rates are great. They've been driven up now, but I don't see the allure. Windsor, as an example, I barely see the allure there. University of Windsor is like pretty much the only thing that is dragging that blue collar town. But a lot of people made a lot of money there. I think it's overvalued now. There was an opportunity, I think, in the beginning, but less so now. Yeah. So what do I know? What do I know? I look at the data. And for me, it's about trying to predict how that market will grow. The challenge is a lot of it has to do with where the investors pool their capital. And so if everyone's going to Belleville and you get on early enough, you could ride that wave as investors push cap rates to crazy rates. But if all the investors are already there, like at Windsor, I wouldn't. Let's develop a competitive edge there or something, get some really great deals maybe. Any market can work if you could develop a competitive edge in that market. Bum, 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 bum. Juan says, what advice would you give to someone trying to accomplish early retirement of real estate or stocks? I think what you mean is like with real estate and stocks. So Juan, I think that the most important thing that that you can do when you're trying to achieve early retirement is to get a really high savings rate. And then when you're investing on the real estate and on the stock side, be focused on not losing money. What you want to have is a good compounded growth rate. And so that means don't be hasty. Don't put it all in one property. Don't put it all in one stock. Diversification is the most important thing. Do not lose money. That is the cornerstone of building wealth. A lot of people are chasing crypto. Crypto is a great asset class, by the way, for 2, 3, 4, 5% of your portfolio. Don't put 50% of your net worth into crypto. Don't put 100% of your net worth into crypto. Don't put everything into one. Spread it around, guys, because sectors can get destroyed for a time. And by the way, I think that in the next little bit, there's going to be a really great run on crypto in the next 5 years. So I think in the next year, we're going to see a really good buying opportunity. I think Bitcoin's going to get down to below 10,000. And when it does, you can buy 10 Bitcoin for 100 grand, and those 10 Bitcoin will be worth $1 million in the next 5-10 years. Am I going to put all my money into it? No. Like, I think it's a side little hustle that you can throw a small amount of your net worth into, and it could pop off. It probably will. It's the future, I think. But what if we're wrong? I also think the market's going to go down. I'm shorting it, but I could be wrong, which is why I hedge, and I got some longs in there too, because I don't know for sure. Bum, bum, bum. Next question. Yuri says, just joined, watch the replay later. Thanks, Yuri. Appreciate you joining. And for anyone watching the replay, by the way, for the, if you're one of the 1,500 people watching it, I really appreciate you, by the way. I know some people leave it on like a podcast when they're working. And so I'm glad that my words can help you grow and help you think critically through things. If you ever have any questions, reach out to me. You just know where to find me. I said, thank you for being here for us for all the years and the tons of value. No problem. Always happy to help and build rapport. Someday that's going to come back and we'll have a community somewhere. And I think that all these years of investment will pay off in spades. Drew says, what do you think about the Airbnb market in Calgary area? I can't comment. I've heard good things. Prices were quite depressed for a while too while oil was down, but I think Calgary's probably booming right now. It's very sensitive market. Giorgio says, how do you feel about cannabis industry now with a lot of debt-ridden stuff dying off? Well, anything debt-ridden right now in tech or in any sector is getting destroyed. There's just not capital for it right now. USA legalization could be a nice bull ride. Honestly, I don't follow the business, but it's like how I feel with beer or with any of those businesses. I think that people get addicted and they buy a lot of it, and it's highly profitable. So if you have a good operation, it can be very profitable. Yeah, I mean, it's a big business, but there will be a lot of operators who will go under. So be careful, guys. Smash the like button. Thanks for your time. Okay, thanks everyone. Watch the World Cup. Not really. I'll catch probably catch like the final game, but I'm not huge. I'd rather play than watch. All right, everyone. Thank you so much for watching. Appreciate everyone who tuned in tonight. And remember, at the end of this stream, go check out, what's Matt McKeever's new channel? Canadian Real Estate something. They have a live thing. Go in the comments right now real quick and just say here because Mike Rosehart sent me. That would make their day, and I don't mind passing the love on. They're going live right now at 8 o'clock. So after my show, you can go check out their show. Yeah, thanks everyone. Remember, the secret to unlocking wealth through you: spend less, earn more, maximize returns and the difference. That's it, guys. Have a good evening. We'll see you next week, and we'll see you on all the socials. Instagram, Facebook. Bye, everyone.